Important note, this video is not financial advice. Always do your own research before making any investment decision. Past performance does not guarantee future results. Here's your market briefing from Rumour with AI. Quantum computing is no longer a theoretical threat, it is an immediate liability for the cryptocurrency industry. Coinbase Advisory Council has issued a stark warning: approximately 7 million Bitcoin are currently vulnerable to quantum decryption attacks. This revelation has triggered a significant repricing of risk in the crypto-adjacent equity space. Coinbase stock surged 4.2% as investors grappled with the timeline for post-quantum migration. The industry now faces a critical question regarding the security infrastructure required to protect digital assets before quantum processors become powerful enough to break current encryption standards. Meanwhile, the pharmaceutical sector is grappling with regulatory uncertainty. Amgen has engaged the Duke Clinical Research Institute to conduct a comprehensive re-evaluation of Tavneos data. This move comes as the FDA considers withdrawing the ANCA-associated vasculitis drug from the market. The stakes are high for Amgen, which is betting heavily on the clinical validity of its existing data to save the product. The outcome of this review will likely set a precedent for how the FDA handles drug withdrawals based on post-market surveillance data. On the macro front, capital allocation dynamics are shifting rapidly. FX analysts note that foreign investors are prioritizing U.S. IPO-bound equities over the U.S. dollar. This signals a decisive pivot away from traditional safe haven currency plays toward growth-oriented assets. The U.S. dollar is losing its grip as the primary vehicle for international capital deployment. Instead, global liquidity is flowing directly into American public markets, driven by the allure of initial public offerings. This trend is further amplified by the opening of AI public market floodgates. The Financial Times reports that capital is aggressively moving toward generative infrastructure and software plays. The market is no longer just speculating on AI, it is funding the underlying architecture. This shift suggests a maturation of the AI sector, where investment is moving from hype to tangible infrastructure development. Looking ahead to earnings, the retail sector continues to struggle. Children's Place is set to report Q1 2027 earnings on June 12. Consensus forecasts a deep loss, with analysts predicting an EPS of -$2.15 and revenue of $198.32 million. This reflects an 18.1% decline in sales, highlighting the ongoing pressure on traditional brick-and-mortar retailers. The gap between digital native brands and legacy retailers is widening, with Children's Place serving as a cautionary tale for the sector. While there are no major economic calendar releases in the next 36 hours that would disrupt these narratives, the market is digesting these structural shifts. The convergence of quantum risk, regulatory scrutiny, and capital reallocation is reshaping the investment landscape. Investors must navigate these complex interdependencies carefully. The days of passive allocation are over. Active management of geopolitical and technological risks is now paramount. That's your market briefing. Follow Rumour with AI for daily market intelligence.